Hello, and welcome to Avalara's latest e-invoicing webinar on e-invoicing updates in Japan and Singapore. I'm Alex Wolf, Senior Director for Global Indirect Tax at Avalara. I'm also our lead product owner for our e-invoicing and live reporting solution. I'm also really pleased to be joined today by my colleague, Chris Park. Chris is a Senior Manager within our Alliances team, but Chris is also one of our lead subject matter experts for the Asia Pacific region. Chris, can you introduce yourself, say hello, maybe provide a bit of background about your work as an advisor in the APAC area?
Thanks, Alex. I'm delighted to be here. As Alex said, my name is Chris, and I'm an Alliances Manager at Avalara. In terms of my role, I build partner relationships with the accounting consulting firms in EMEA and some of APAC as well. In terms of my background, I started my career with a legal background in New Zealand, working in GST and customs. I also spent a few years working in Malaysia during the GST implementation in 2014 and 15 as well. So, saw a lot of sort of the fundamental business process changes that are required as part of an indirect tax rollout.
Thanks, Chris. Really great to have you with us. So in terms of today's webinar, what's on the agenda? Well, we're going to start off with a bit of background, looking at e-invoicing, looking at Peppol, the Peppol network and the four-corner model that makes up that network. And then we're going to dive straight in, looking at Singapore and Japan, the latest on their e-invoicing initiatives, and providing a bit of background on the drivers, the latest technical specifications, and an update on adoption.
So let's start with some basics. Alex, can you tell us what an e-invoice is?
Absolutely. Well, an e-invoice is a digital document with data in a structured format, so structured data. So we have consistency. We have consistency in the format of the document and the format of the content of that invoice. So it's structured data. We're moving away from paper. We're moving away from standard traditional PDFs. We're moving away from scanning, OCR. We're really looking at structured data that can be machine read. So, we're looking at XML and a couple of, really common iterations of that XML are CII, the cross-industry invoice, and UBL, Universal Business Language. But it's also about tax. It's not just sharing that document, between the two parties. It's the reporting of tax and transactional information from that e-invoice to the tax authorities. This is usually part of the process. So that data is shared in real time. It can be a parallel process. We've seen that in Hungary with Hungarian real-time reporting. There isn't a requirement to actually issue an e-invoice to the counterparty, but whenever an invoice is raised, certain data needs to be reported in a mandated format to the tax authority. And what does this do? Well, it provides the tax authorities with that digital audit trail. It gives them the visibility at a transactional level, real granular detail in a common format, moving away from just being able to look at a summary VAT or GST return with aggregated data. It really is too little, too late in the fight against fraud. And this e-invoicing process, if the government's involved, it gives the tax authority the ability to review, approve, validate, even digitally sign, and send to the customer in some countries every single transaction, every single invoice.
So really, we're looking at getting it right first time, and tax almost playing a parallel role with finance rather than waiting for the books to finally close to get access to that data and that manic process that we are all familiar with to go through, identify errors, and then issue corrections and credit notes.
Completely. VAT compliance, indirect tax compliance becomes real time. It really is a 24/7 process now. It's no longer a periodic end of period reporting process. It becomes intrinsically linked with the business process. It is one. Every time an invoice is issued or received, there's a requirement, to get that data correct. And with that additional visibility, tax becomes more crucial. Gone are the days where, look, if there was a mistake, it's fine. We identify it later down the line. We do a voluntary disclosure. Tax authorities can have the ability to receive that invoice in real time. So they're aware of the tax that's been charged. They're aware of the tax that's being recovered through the input tax credit mechanism.
So, Alex, we've talked about what an e-invoice is, and we've almost kind of bled that conversation has gone into, what this might mean for a business, and why tax becomes a lot more important as well. You've mentioned the term Peppol a couple of times. You mentioned that it started, its origins were really around public procurement, and then it sort of expanded its mandate beyond that. Can you tell us what this is and why it's relevant for Japan and Singapore today?
Absolutely. Well, if we were having this conversation, 3-4 years ago, Peppol is an acronym. You would have seen Peppol all in capitals, and it really was just an acronym. It stood for Pan-European Public Procurement Online. It's evolved. It was originally a European organization with a remit to create a common European standard, a common network, and to provide the ability for those documents to be exchanged. It was built as a compliance way to implement the European e-invoicing standard, EN 16931. You're going to hear a lot more about that standard with VIDA. But today, Peppol has evolved. It's no longer an acronym. Open Peppol, even the way the logo is presented, it's no longer an acronym. It is a global organization. It's a global network. The standards are no longer just pan-European. They're international. And that network is no longer just a network of European businesses. There's about 750,000 businesses or government agencies on the network today. That's likely to exceed 1 million later this year. We've just celebrated the 10-year anniversary of Peppol. And we're now seeing further evolution of Peppol further afield. Japan and Singapore.
So, Alex, there are a couple of elements on this slide that I want to bring out. So, Peppol seems to be a number of things. So, firstly, it's a network. And if I were to draw an analogy, it sounds almost like an internet. So, the means through which we transmit, so it sounds like, every sort of Peppol provider would almost have an address on this sort of Peppol network that, all of these invoices get sent through. The other thing I want to sort of point out is that BIS3 standard that you mentioned as well. So this would be the format, because I'm sure there are multiple e-invoice formats, and they could potentially be different for every country as well.
Yeah, completely right. So, a couple of points there. You talked about the network. You talked about it, almost, like being a kind of internet address. It's a good analogy. And another analogy is think about mobile phones. When you're sending a text message, you may be on holiday somewhere. May be traveling for business. You may be sending a message to someone in a different country. Everything works seamlessly. Even though there may be different infrastructure, different dialing codes, the networks have got together. They've allowed roaming. Actually, within the EU, we're celebrating an anniversary today of getting rid of roaming charges. This is what Peppol has done for e-invoicing. There is no longer any concept of roaming charges as an invoice crosses a national border. There is a network created using something called the four-corner model, so using service providers who send and receive invoices on behalf of their respective customers. And that has the ability to then create this global network. It's a connect once, reach all concept. There is a central directory that in effect tells a business if their customers, if their suppliers are on the network, and if they are, what their unique address is. And that directory also knows where to route that invoice, who is their Peppol service provider. So it really is an open network. It allows the exchange of invoices in a common format. I've highlighted Peppol Biz 3 on the screen. That is the current standard, the format that's being used within Europe. But a bit later in this webinar, we're going to talk about the future of Peppol e-invoicing, and really that's the international standard PINT. And Japan is actually the first country to really implement that.
So, you've explained sort of what Peppol is, where it came from, and it sounds like there's sort of the network that it represents. Japan, Singapore could have sort of gone their own route and decided to sort of create domestic, almost intranets for e-invoicing. Why do you think they adopted Peppol?
You're completely right, and a lot of countries have done their own thing. They've looked at this very much from a domestic perspective. They've set more stringent requirements in terms of how an invoice is issued and exchanged, often with the tax authority sitting in the middle or building their own infrastructure in a kind of centralized model. But I think what Singapore and Japan have done. They've looked at their neighbors. They've looked at Australia, they've looked at New Zealand, they've looked across to Europe, and they've seen a framework, standards, policies, and a network that's proven. It's been used in over 34 different countries. It's been in place 12 years. There are standards and interoperability that is achieved through those common standards. And there's a lot of governance around that too, and that's governance underpinned by Open Peppol. And there's a big focus here on the finance transformation angle too. It's around digital transformation. It's around the benefits that are produced by e-invoicing and using Peppol. So particularly around P2P, the AP function. When you receive invoices electronically, it's in that common format. Your ERP system is able to receive those and post them. You can do a lot of, really clever automation when you're receiving everything in the same format with structured data. And, we said before, okay, the big driver here in the region, Australia, New Zealand, Singapore, Japan, isn't necessarily tax. It is this business efficiency, it's digitalization. And I think that's why Peppol's been chosen as well. It's looking at those benefits and using that experience.
Alex, you gave a really good analogy of what the Peppol network looks like and how it works. And I think you used the example of a mobile phone. I might be on a different network to you, and it's not like our phones are communicating directly, which would be a good analogy for an EDI, custom EDI built. We would send the e-invoice, to the network, and it could well be that we're using different e-invoicing solution providers. They would communicate through that Peppol network to ultimately send that across. So, that sort of that four-corner model that you mentioned as well. Could you sort of walk us through this diagram in a bit more detail?
Yeah, absolutely. So you're completely right. It's a four-corner model, underpinned by certified service providers in the middle. So, receiving invoice data from an ERP system, converting that to the right format, running checks to make sure it meets the relevant standards and syntax checks. Then calling the address service, understanding, where to send that invoice. And then the counterparty will have their own service provider too. And the great thing here is those service providers don't have to be the same. We're not looking at those legacy procurement networks where you were forced to use a single provider. You were forced to use the same provider as your vendor, as your customer. You are free to engage, with whatever provider you want. There may be restrictions in terms of, are they certified in the country? But due to interoperability, due to the common standards, due to this infrastructure and network, you can have different service providers. And, there's no charge for roaming. There's no additional cost by going, through a different service provider. And this works on the receipt side too. So the purchaser, the customer, they will receive the invoice. They will receive it and they will then pass it back to their underlying customer.
Right. Look, thanks, Alex. Why don't we dive into some of the more country-specific information? Let's start with Singapore. So can you tell us a little bit about sort of the origins? And I think this is interesting because it gives you a more informed view of what's driving this and what the Singaporean authorities are really looking for with this as well.
Absolutely. So, Singapore has been on an e-invoicing journey for a number of years, about 5 years now. So the Info Communications Media Development Authority, the IMDA, actually became the first Peppol authority outside of Europe. That was back in 2018. So as a Peppol authority, that is the body that's tasked with approving, accrediting Peppol access providers, also accrediting ERPs, accounting software that is e-invoicing enabled. They're also the ones who govern and specify the very specific country standards. What are the local rules that need to apply in that country? And, most importantly, they're tasked with promoting the adoption of e-invoicing in the country. So what we saw is a national network launched in 2019, but then a year later, this was rebranded. So it's now known as Invoice Now.
So Alex, on the slide, I see that the Inland Revenue Authority of Singapore is not listed on here. Are they playing a role in this? I mean, are they receiving copies of the invoice?
Currently, no. It's a different government department agency that is, running Peppol. It's the media development side rather than the tax authority. So, they are not receiving the data. They are not the access point. They're not providing a central platform. The real driver here is finance transformation, it's digitalization, it's the benefits that e-invoicing brings.
I think the first question that everyone's going to have in mind is, do I have to, or when do I have to? It might be the next question. So I see on the screen that it's encouraged, but it's not mandated. Can you give us some insight as to sort of, what might be driving this? And we know that some countries have just mandated it and everyone's had to sort of follow this.
Yeah, and so there isn't a general mandate at the moment for business to business e-invoicing. It's not like some countries we've talked about Italy, we've talked about France, Spain, Poland next year in Europe. There's mandatory invoicing in a number of Asian countries, but within Singapore, it's not tax driven. So the Peppol Authority is really encouraging it, is promoting it. We're going to talk about incentives a bit later on, but really it's about digitalization. It's the automation. It's the reduced cost for every invoice that's issued and received. It's moving away from more manual processes. It's moving away from paper. It's really helping SMEs and enterprise businesses adopt further digitalization, adopt best practice, and doing that as a country, and doing it using a common standard rather than different businesses taking different approaches. For business to government, there's a slightly different angle to this because it really is required, it's mandated, if not specifically by law, by practical implementation. So businesses in Singapore, generally submit e-invoices now to the Singapore government, to the various agencies that make up the government via Invoice Now. So I did mention that, tax is not the driver, but that's not to say that GST doesn't play a really key part in e-invoicing in Singapore. So, I pulled out a bit of a quote here from the Singapore Peppol Biz Billing Guide. The invoice is used to carry GST-related information from the seller to the buyer to enable the buyer and seller to correctly handle GST booking and reporting. An invoice should contain sufficient information to enable the buyer and any auditor to determine whether the invoice is correct from a GST point of view. The invoice shall allow the determination of the GST regime, the calculation and description of the tax in accordance with Singapore GST regulations. So, straight off the bat, any invoice, in Singapore still needs to meet the normal tax GST invoice requirements. But at the same time, the invoice standard, the information within it has been set up to help articulate the tax information. So provide that in a structured format, a consistent format, but also with a consistent taxonomy. And there are a lot of very local checks and requirements in Singapore, all focused on Singapore GST.
So the GST Act in Singapore will have a definition of what constitutes a tax invoice. And with e-invoicing coming in, I am assuming that, they will, or maybe perhaps they already have gone through some of the legislation to reflect, what that e-invoice equivalent would look like. Can you tell us a little bit more about sort of the interaction between Irish, the Singaporean tax authority, and e-invoicing?
Yeah, absolutely. So, what is, IRAS, set the rules, they administer the tax. But, what the implementation of Peppol has done in Singapore is let's reflect those GST requirements. So let's look at the GST legislation and let's embed those rules within the actual Peppol biz billing rules for e-invoicing. So, I've pulled out a few examples here on the screen. Every line item on an invoice has to have the itemized GST category code. You need to provide a GST breakdown for each distinct combination of a GST category code and GST rates. You need to meet the normal currency requirements. So, if the invoice currency of the document isn't in Singapore dollar, the GST needs to be shown in Singapore dollars as well.
I mean, a lot of countries have similar rules, especially, if I take the currency conversion, for example, you're generally required to show the tax amount in the local currency or the reporting currency so that there is no mismatch. Having gone through business transformation projects, around the world, I think it's fair to say that this is something that businesses generally, know about, but they might not invest a huge amount of time and effort into really trying to get little rounding errors corrected or making sure that all of the FX conversions are, in accordance with the law. Now, with e-invoicing, I do wonder whether this will become a lot more important because, again, we've got structured data, which is consistent across every single business in Singapore that's using e-invoicing. And then, with Iris, being able to request this information at a drop of a hat, we could even potentially see the tax authorities starting to do invoice matching on a sort of a line by line, tax item by item basis, and pretty easily just using some data analytics solutions.
Yeah, absolutely. So, as I said before, the idea that we have structured data now, everything's digital rather than paper, it gives the tax authorities the ability to not only request, review, but also run, enhanced data analytics. In some countries in LATAM, we're even seeing AI, machine learning, being applied, and then the ability, as you said, to kind of match off, compare, reconcile output tax with input tax. So, consistency becomes, very, very key. And I'll just say, look, within e-invoicing, it's a great level setter because, multinationals, okay, they're striving for compliance, but they may be limited by limitations within an ERP system, within, certain processes and data sets. Within e-invoicing, data is so key because if the data is not in the right format or there's data missing or data is not within the same taxonomy, the same catalog, the same code list that's required, the invoice will be rejected, maybe initially as an internal control by the e-invoice solution provider like Avalara, or ultimately by the network or the platform where the invoice is being sent. So any errors that you may find now, when you're doing a due diligence, when you receive an invoice from a customer, you might think, okay, this is slightly not procedurally correct. Maybe there's a couple of items that are missing, and you think, okay, what is the risk? In the future, under e-invoicing, missing a required field is just not an option. Computer will say no, the invoice will fail, it will not be delivered. So, I always say, to customers, clients that I'm talking with, okay, e-invoicing is, of course, a big technology project, but the more important angle, and I think an area that deserves, just as much attention, is the data side. What data do you hold for your suppliers, for your customers? Is it granular enough? What format is it in? You then need to look at the impact to processes. You then need to look at stakeholder awareness. In Singapore, if a business is now adopting InvoiceNow, they're adopting the Peppol network. Not every customer or supplier will be on that network. They may not even be aware of it. So there's a very, key requirement there for businesses to actually reach out, engage with their counterparties, with their trading partners, and say, look, we're adopting e-invoicing. This is how we want to receive invoices going forward. We would love to issue you with e-invoices. Are you on the network? What is your number? If they're not, maybe there's a way of enticing them, encouraging them, incentivizing them to join, because there are business benefits, there are process benefits, but you're very reliant on your counterparty being on that network, because just like I said, if there's a missing bit of data, computer says no, the invoice isn't issued. If the counterparty is not in the Peppol directory, they have no means of receiving that invoice. And of course, this invoice is within XML. It is machine readable. So, they can't receive it offline. They need to be able to receive it, ingest it, through the network.
Alex, you talked about change management as well as stakeholder sort of communications as well. I think, stakeholder applies equally to sort of customer vendor relationships as it does sort of within the business. And I guess that's really what we're mentioning when we talk about change management as well. Every business, there'll be different functions within that business that will be impacted by a rollout of e-invoicing. Alex, you gave a really good example of the fact that not every business you deal with or every customer you deal with is going to be on this network when you go live with this. So, what does that mean from an AP perspective, the people processing invoices? You're almost going to have dual processes. And similarly with the invoicing as well, there's going to be some upskilling that needs to be done. And we're going to see a network effect with this as well. We're going to expect more and more businesses come online as well. So what does that process look like to stay on top of that, to maximize the benefits of the investment you've put into, enable e-invoicing in your business as well?
I think some really good points you just raised there. I think it's, being aligned to the fact that not all of your trading partners are going to adopt e-invoicing at the same time, particularly where there isn't a mandate. So, you need to look at what's the impact to my current customers and suppliers. Do I have any special arrangements with any? Do any of them currently make me use a procurement network? Am I going to continue to do that, or am I going to use Peppol instead? Do I operate any self-billing arrangements? With some businesses. When I receive invoices on the AP side, I need to design and develop my new policy, my new procedure using Peppol, using InvoiceNow in Singapore. But for customers, suppliers that aren't on Peppol and on that network, I'll still need to have those legacy processes too. And ultimately, both processes, both buckets of invoices still need to go through the same checks, the same controls. They still need to be validated, approved, have the relevant tax code applied, posted into the ERP. So, a big area there that needs to be looked at, training, awareness, updating of policies and procedures, updating of guidance, the guidance you may add on purchase orders, the guidance that may be on sales orders. Comms is super, super important, both internal and external.
You talked about incentives to try and get more of the business relationships on this e-invoicing network, once you've joined it yourself. I can imagine you might even offer slightly more quicker payment terms, for example, if it means far less work for you to deal with these AP side invoices, for example.
Absolutely. And that's what we've seen, government do in Australia. If you use the Peppol network to invoice Australian government at the federal level, they will pay that invoice within 5 days. So, we're starting to see that within mainstream business too, recognizing, the increased automation, the reduced cost of receiving e-documents. So, incentivize, your supplier, pay them quicker.
Alex, one of the changes you mentioned in terms of the tax invoice requirements from an e-invoicing perspective was the inclusion of GST category codes. Can you tell us a little bit about what these are and why this has been brought in?
Absolutely. I don't want to go into too much detail here because it's getting a bit more on the technical side, but yeah, it's a way of tagging an invoice, telling the recipient of the invoice the type of supply, and in effect the liability too. So a few examples here: plain vanilla, standard rated. It's a local supply of goods or services. So this provides guidance and an audit trail for the supplier. So it can help with tax coding. It can be a result of tax determination, maybe using a tax engine. But on the recipient side, again, this might be able to help with the posting and then the tax coding. We know it's standard rated. We know we can then apply that tax code, maybe in an automated fashion using that GST category code as a driver. And I think, this is a great example in Singapore and something that can really lead to increased automation for tax coding and posting and reporting.
I can see Iris being particularly happy about this because that means every single business in Singapore using e-invoicing is using the same codes to classify their transactions from a GST perspective. So, in terms of what you could do from a tax audit perspective as well, I think this would be extremely powerful.
Absolutely. Completely agree.
So, Alex, you mentioned that e-invoicing in Singapore is encouraged, but not mandatory. It's great to see that the Singaporean authorities have, added sort of financial incentives to encourage businesses to adopt Invoice Now, which is on screen at the moment. Putting aside sort of the direct financial kind of cash contributions from the government, I mean, what would you say are some of the other benefits that businesses would get from implementing something like e-invoicing?
Yeah, so I've mentioned a few already. It is the reduced cost of issuing, receiving, processing paper documents, PDF documents, removing a lot of the manual work. So reducing full-time employees, or more importantly, the effort and workload of those full-time employees. They can start working on things which are more strategic, adding more value to the business. So you're really automating the issuing, the receiving, the posting. A lot of the checks that are traditionally carried out by people can be carried out in an automated fashion based on these common standards, based on structured data, based on common taxonomy, common codes that are used.
So, Alex, you have Corp Pass KYC on the screen. When we think of KYC, know your client, it's usually more about sort of AML checks. What relevance does this have to e-invoicing in Singapore?
So, one of the things about Peppol, and I think why it was selected is the concept of trust. You know who your trading partner is. They're in the Peppol directory. You're using an accredited service provider that's had to, provide a lot of documentation, gone through quite a long process. with the national authority. But one of the key processes there is to actually authorize your service provider, because they're the ones who are issuing and receiving e-invoices on the network on the business's behalf. So, Singapore's recognized that that's quite a big step, that authorization. And, they don't want that to be, subject to fraud. They want to have a clear audit trail. They want to put controls in place. So, this is fairly new. We've seen this national identity infrastructure implemented as part of the Invoice Now network process. So, when a Singapore business authorizes their service provider to register them in the Peppol network to join the Invoice Now network, they have to use this court pass to authorize. So there's encryption, there's security, there's verification on the identity. This is also a requirement as well when you want to start invoicing the government as well. So another check, making sure that the authenticity of the issuer, of the supplier, is good, correct, and valid, but also evidencing this authorization to the certified Peppol provider.
Great. Look, let's move on to Japan.
Definitely. So Japan, another major economy within Asia Pacific that is now incentivizing and encouraging e-invoicing. And I said before that the driver wasn't tax, but kind of it is, because Japan will actually implement a new invoicing system for its national indirect tax, Japanese consumption tax, or JCT, and that's taken place from the 1st of October 2023, later this year. So historically, under the JCT regime, there were less onerous invoicing requirements. So businesses could use other documentation, accounting records to evidence JCT. This is often known as the ledger method. But going forward from the 1st of October 2023, in order to issue a qualified tax invoice, the business issuing that invoice has to be registered for qualified tax invoice purposes. They need to be registered with the tax authority. They will then be required to issue, formal invoices with very strict requirements, more akin to the EU concept of a tax invoice. And then on the flip side, for a business that wishes to claim input tax JPT credits, they need to be in possession of that qualified invoice.
Alex, just to clarify a couple of things, it sounds like there are two separate but parallel developments in the Japanese consumption tax system. So one is that introduction, the idea of what we call a tax invoice in Europe, which is that document that entitles us to recover the input tax deduction. At the same time, there is an introduction of an e-invoicing sort of specification as well. So does this mean that you can still issue a qualified invoice without that being an electronic invoice? Absolutely.
And actually the Japanese Peppol Authority, want to make that clear. There's been a lot of kind of rumors or maybe misinterpretation. I've certainly watched webinars where it's been announced that this is a mandate. Everyone has to adopt this e-invoicing from the 1st of October. It's not the case, but the format of that invoice is a business decision. That can still be paper. It can still be a PDF. But, the Japanese government have recognized the benefits of e-invoicing. And so, they've adopted Peppol. But at the same time, they said, look, this is a really good, efficient way of implementing this qualified tax invoice requirement. So the new e-invoice standard that's been adopted, PINT, and I'm going to talk about that in a bit more detail, it's been built to meet these new qualified tax invoice requirements. So you use PINT, you use Peppol, you meet the requirements. And it's a good, efficient way of issuing and receiving these documents.
So really, this is no coincidence that this is coming out at the same time, and the Japanese authorities are basically saying, "Why don't you kill two birds with one stone?"
Absolutely, absolutely.
So, Alex, you mentioned that Japan has also adopted Peppol. Now, I'm sure that with the BIS3 standard, and the Peppol network, some of this might not fit, Japanese specific business requirements or JCT specific requirements as well. Can you tell us a little bit more about PINT?
Sure. So completely right. So Europe has adopted BIS3. When we saw Australia, New Zealand adopt Peppol, they had to make a few changes around the edges, to the BIS3 standard. They had to change the word VAT to GST. There were a few other, rules, reconciliations that they had to change. In order for e-invoicing to be interoperable, to achieve global interoperability, to allow more and more countries with different tax regimes to join Peppol, it's been recognized that the Peppol standard needs to evolve. And that evolution is the Peppol International Invoice Model, or PINT, which I think is a really, really good name. And Japan is actually the first country in the globe to implement PINT. So we have the JP PINT standard. This has now been formally released. It's been published. It's no longer in some sort of kind of beta concept phase. This is now in production. It's been finalized. And I'll talk about, what PINT means in a minute, but within Japan, it has shared PINT rules. So it still meets a lot of these kind of global common standards, common rules, but with some localization specific for Japan. And one of the main specific requirements that Japan has implemented is to support this qualified invoice system that's coming online from the 1st of October. They're also going to be producing new standards under PINT for self-billing. They also are going to develop an invoice template for invoices for suppliers that are non-tax registered. So businesses who are tax exempt, businesses that are issuing invoices but aren't registered as a qualified tax invoice issuer.
Alex, it's really interesting to see Japan being the first to adopt like what is intended to be like a globalized sort of model and following sort of, I guess, global best practices when it comes to e-invoicing. Traditionally, Japan has always been known as a bit of a Galapagos when it comes to sort of technology development, very much like going in their own specific way. What I think this means is, if Japan, which can be extremely insular when it comes to sort of business practices and have very specific requirements, if even countries like Japan can adopt PINT, then potentially this could mean that other countries do as well.
Absolutely, and Japan really is the poster child of PINT. They're the trailblazer, adopting it for the first time, and actually, we are going to see PINT becoming the global standard. Europe will move there probably in the next couple of years. On our previous webinar, Mark Stockwell from the ATO in Australia, also confirmed that Australia will also move to PINT. Couldn't give an exact timeline, but probably along the same sort of timeline as Europe over the next couple of years. So, what does PINT mean? Well, we're looking at 3 different levels or layers. So we're looking at kind of 80% harmonization. It's shared. These are common specifications which are defined and used in the same way, the same semantic meanings, the same code lists, the same rules. We're then having about 15% of alignment. So everything can be understood, across all jurisdictions, but there can be some customization here, some specific invoicing requirements that are unique to a country within this aligned layer. And then you have the final 5%. So these are kind of the distinct category, the distinct layer. And this is, country-specific requirements or maybe even in the future, industry-specific requirements. So this allows some additional content, some additional rules to be added that are very niche to a country.
Alex, we talked about the qualified invoice introduction as well as e-invoicing as well. And I think briefly you also alluded to some electronic storage requirements that the Japanese tax authorities have introduced as well. Can you tell us sort of what those requirements are, high level, and then how those three elements kind of interplay with each other as well?
Absolutely. So, again, this is part of a series of different changes in Japan. So, back in 2021, there was a new law on electronic record retention. And that said that with effect, the 1st of January 2022, so last year, you could no longer preserve electronic transaction records in hard copy. So historically, documentation requirements for tax, may be a bit more fluid, compared to the new qualified tax invoice requirements. It was the same for storage too. You could still print off copies of invoices, put them in folders and files, store them offline, off-site, in an archiving facility. There is now a move to digitalization in that area too. So very strict requirements that all electronic transaction records, so that includes invoices and e-invoices, have to be stored electronically. And the great comparison here is probably Italy. Italy has very strict rules on data preservation. You have very strict rules on archiving, time stamping, really showing when these records are put into the archive. You need to ensure the integrity of that data, business controls in place to ensure that no one can change that data. It's still the same as when that invoice was issued and received. You need to be able to ensure the readability. How can that structured data, be read by a human, presented on a screen? You need the ability to search and retrieve these documents. And you also need to have new up-to-date documentation about your systems that you use to archive and the processes around that. So again, very similar to Italy, something that, a lot of businesses are still looking at in Japan. How do I meet these requirements? Do I have the technology? Do I have the process? Have I trained, my staff to deal with this? And again, the move to e-invoicing, the move to qualified tax invoicing, Peppol and e-invoicing is a way of meeting this, because you're now using invoices in a structured data format. You're receiving that in a common format. You then can create an automated process to store, to archive, to timestamp and retrieve. So, when you're looking at e-invoicing, it's not just about issue and receipt. You're looking at the entire end-to-end life cycle. How do I archive that document? How do I preserve it? How do I ensure the integrity? How do I timestamp it? Where is that stored? Interestingly, Japan have said storage archiving can be outside of Japan, as long as you meet, all of these other strict requirements.
So Alex, at the beginning, I think I said, two birds with one stone when you introduced the concept of the qualified invoice and
three birds. It's three birds.
I was going to say this is really three birds with one stone. So, maybe that's almost to counter the fact that this is not e-invoicing. I mean, it is not a mandate in Japan.
Exactly. And who knows, in the future, we may see a mandate come in. What I expect to see is just widespread adoption. We will see the network effect. We're going to see more and more service providers who will become accredited. We'll see further adoption by mainstream ERP providers. They will be able to issue and receive e-invoices, connect to the Peppol network. And this just becomes, a way of doing business. I know there's a lot of interest with Japanese businesses, both multinationals, SMEs as well. They want to digitalize. They're finding solution providers now. They see this as a way of meeting that new qualified tax invoice requirements on the AP side, on the AR side, but also for this archiving requirement too.
So we've talked about the three sort of elements, all sort of intrinsically tied with the e-invoicing sort of specification that the Japanese authorities have introduced. We want to make it really clear, it's not a mandate in Japan. However, it's sort of a natural way to address some of the other sort of changes that are happening, both from an electronic archiving perspective and from a Japanese consumption tax perspective as well. Alex, you talked about the very strict rules around sort of data retention, archiving as well. Is that generally something that an e-invoicing solution provider would also sort of provide in addition to, sending, transmitting, receiving as well?
Yeah, very good question. I suppose, the question is, it does vary. So it's a question to ask your service provider. If you're looking to do an RFP, if you're having discussions, do you ask about archiving? It's certainly something, Avalara provides as part of our next generation solution. For us, it is about the end-to-end life cycle. It's about being able to archive e-invoices and retrieve them in a compliant manner. So that's certainly something Avalara provides as part of the solution. And I just really see this as the future in Japan. This is a big change. It's a huge tax change. It's a huge change to finance and business processes. And so, why would businesses look to kind of meet that via an analog approach? This is a great opportunity to really digitalize, to really automate, to achieve additional business and process benefits.
So, Alex, we've covered two different e-invoicing specifications for Singapore and Japan respectively today. And, we made it really clear that none of them are mandatory. Now, you've also talked about some of the business benefits, some of the process administrative benefits of introducing and bringing, enabling e-invoicing for businesses as well. Now, let's say you've gone through sort of the weighing up decisions of, how you're going to meet the qualified invoice requirement or the digital archiving requirements, and you've weighed up, whether the additional or the preferable payment terms, are going to make it worthwhile for your business. You've made that decision to go ahead to enable, to implement an e-invoicing solution for your business. How do you go about choosing the right approach or the right solution for you?
Very good question. Could probably devote an entire webinar to that, and maybe we will in the future. Look, I think you've got two things. You've got the local aspect there. You need to find a solution that meets the local requirements. There may be rules around accreditation. Looking at Japan, looking at Peppol, Avalara is an accredited Peppol access point and service provider across the APAC region in Australia and New Zealand. And Japan, we're currently applying in Singapore. We're a certified Peppol provider in Europe, via Open Peppol. But it's moving away from that local mindset too. It's looking at e-invoicing as a global strategic issue. Historically, a lot of businesses just found a tactical approach. Let's find a local patch. Let's even outsource. Let's find a local service provider. But you don't get the scalability there. You don't future-proof the business. If you operate in more than one country, you need to start looking at this holistically. So, I'd say, do look at country coverage. Don't just look at the countries that have e-invoicing today. Look at the countries that are going to mandate e-invoicing next year, over the next 2 or 3 years. You need a single provider, a single e-invoicing platform. Integration is very important too. We've designed the Avalara e-invoicing and live reporting next generation solution based on a single API connection. And we built that on a global standard. So, that's built on Universal Business Language 2.1. So, moving away from making someone build to your own template, your own set of data fields, building on a common global standard. And then the solution itself will then convert the invoice, the relevant format, send it to the relevant network, the relevant customer. So I think, think global, scalable, but also, do look at accreditations too. And, we're very proud, to recently receive certified status, within Japan.
So Alex, I want to come back to that global and thinking a little bit more future proofing as well. I believe we're going to share a copy of the slides that we had, including the slide, looking at the past 10 years and the next few years ahead as well, with the audience participants today as well. Might be a useful reference point for you, but continue to go to our website, because these things change almost on a sort of a week-by-week basis at the moment as well. We're expecting to see new additional mandates, across the world popping up as well. I want to come back to that API point as well. So, if I understand this correctly, this means that if you select a global provider like us, there is a single mapping from all of your impacted systems to our API endpoints. And then it's going to be us that are responsible for converting those data points into each country's specific mandate. So, we talked about the Peppol network and the BIS3 format, which is common across Europe, the JP Pent, and the 80-15-5 rule when it comes to some of the localizations, customizations that we're going to expect to see for each of the countries, even if they adopt the international standard called Pent. So what this should mean is that you can implement once, you can map once, instead of having to map for every single e-invoicing flavor that we'll see globally as well. Have I understood this right?
Absolutely. The idea is, a seamless integration, built on a single connection, a single API. The country mandate itself, the rules, the format. Do we need to add a QR code? Do we need to add a digital signature? Do we need to archive the document in a specific jurisdiction? For us, that's just content, or it's a distinct workflow. When the call is made to the API and the solution, we send over what mandate we want to trigger, what requirements we want to meet, and then it's a single solution that will then meet those requirements. So, still obviously a big emphasis on getting the data right. You need to understand the tax requirements that apply to you, the relevant code lists that needs to be stored within the ERP and parsed. But you're completely right. This is scalable. The initial effort, building that API, connecting, but then kind of adding additional countries as new mandates come online. It should be more of a much more seamless process.
Right, and one final question from me, Alex. Let's say you've watched this webinar, you've still got questions. What should everyone do?
For me, e-invoicing, it's all about awareness. There's some great blogs you can read up on. We've got a lot of webinars on demand, that talk about e-invoicing, talk about various different country mandates, looking at commercial issues. I'd also say, talk to your advisors, talk to your accountant, talk to your tax advisor. What are they seeing? What are they thinking? What are their suggestions in terms of dealing with data, doing a gap analysis on your data sets? What kind of finance transformation do you need to do, before you implement a system? Do you need support, with stakeholder comms, change management? But more importantly, I'd also say, speak internally, get C-suite involvement, make them aware of these changes. This isn't just a tax issue. This is a commercial issue. It's a finance issue. It's a business change issue. So, so many different stakeholders need to be involved, and just awareness and education are key. So, if you can share this webinar, if you can share blogs from avalara.com, please do. I do hope you find this useful. So that's the end of today's webinar. I think we're right up against the clock now, so we're not going to have time to answer all of the questions in the chat at the moment. But do feel free to reach out. You can connect with Avalara by filling in an online form online. You can follow me on LinkedIn. You can follow Chris on LinkedIn too. We hope you had a really good time today. We do have some upcoming e-invoicing webinars too. The next one is actually on e-invoicing in the US. We're going to have an update on the latest position of the US e-invoice exchange market pilot as it moves to a go live network with a common US standard. And you can register now at avalara.com. You'll see the web address on the screen now. And as I said, you can view all of our previous e-invoicing webinars on demand now as well. So thank you very much. I'll let Chris say goodbye, but from me, thank you.
Thank you, everyone.